Good morning, everyone. My name is Robert Garcia. I'm the senior attorney here over at the Closing Agent, powered by Barry Miller Law. And I have with me today David Berman. Want to say thank you for joining us today for our March CE class. Today's presentation is the value of a home, inspections and appraisals. So before we start off, I just want to say thank you for everyone who's participating here today. The market is hot, and we want to say thank you to all the real estate agents and brokers out there. We have pulled through this tough times in 2020. Now things are getting better in 2021. We believe now with the vaccine out there, home sales will continue going strong. The market is strong. Interest rates are low right now. So it is a great time to buy. I know there's a shortage out there. I hear sellers and listing agents telling me, hey, do you know anyone who wants to sell the home? I can't keep up. The inventory is so low right now. So it's a great time.
Absolutely. Obviously, everyone keep your guard up. Let's not let this have any kind of downfall. We've been getting great momentum moving forward, so let's all keep it up.
So, well, today's class is on the value of a home and the inspections and the appraisals. We get phone calls all the time of what's really the difference? And some of you may know it, but some of you may not. And that's the purpose of today's class, to make sure you guys are educated. And if you have questions, the great thing about the Closing Agent is it has a team of five full-time attorneys here to help you out. So you have myself, Robert Garcia, David Berman, Christian Walters, Casey Scalise, and the founder and president, Barry Miller. So you guys may be wondering, where's Barry? He's here all the time. Well, we actually were able to push Barry off to a much needed vacation. It truly is, I think, his first real vacation in probably over 15 years. He still is checking emails here and there. He'll deny it. The man's a workaholic. He's a workhorse. He's a founder. He's an entrepreneur. He's a businessman. So he wanted to make sure all of your emails were checked and responded to. He just got back to the office today. So he's probably checking, I would say,
10, 20,000.
10, yeah. I do not want to be Barry Miller today in his inbox. So we're here on his place. So the great thing about these presentations is we want to make sure you guys get the answers to your questions. So as part of the process, you guys will have the question box in there. We're here to take all of your questions. We'll try to answer them during today's presentation. If we can't get to your questions, feel free, pick up the phone, give us a call. The attorneys here are here to help you. We want to make you guys look like rock stars. We want to grow your business. So let us be the lawyers behind the scenes, making you look like rock stars with your sellers, your buyers, your developers. So let's start the presentation, the value of a home inspection. So like I was saying before, there's the go-to webinar. You can type in your questions in the questions tab. If you have any questions, let us know.
A couple of those attachments can be found. We may have some time to go over those at the end of class, but you'll find a sample appraisal and sample inspection. Some of you may be new agents and never have reviewed those. They're pretty extensive, and it's good to kind of just glance through and see what information is provided to your client.
So what is a real estate inspection? Inspection of the physical condition of the home to determine conditions affecting the home or in need of repair. So generally used to protect the interest of the buyer by ensuring that the property is in good condition and repair. So we have the inspection period. I believe it's what's called under the as-is contract. Sometimes it's called the feasibility study, the due diligence period. People use different terms for the same thing. It's the inspection period. It's the opportunity for the buyer to determine whether the property meets their needs. And what does that mean? That can mean a whole host of things. Does the property have the square footage? Does the zoning accompany what they want to use the property for? Does the infrastructure, the roof, the plumbing, the HVAC system, is it what they want? There's so many different things. But for purposes of today's class, we're going to tailor most of it under the as-is contract because so many of us use that one. I would say 90% of my deals are under the as-is contract.
It's certainly the contract we recommend the most. And today we're going to focus on the residential side. I think the vast majority of you are on the residential side. But again, as Robert said, this could be applicable in a commercial context, typically under a due diligence or feasibility study period. So you just want to understand the contract that you're utilizing. But again, for today's purposes, we're focusing mainly on residential under the as-is contract.
So the great thing about the Closing Agent and Barry Miller Law is we do everything that touches real estate. If it touches or concerns real estate, give us a call. We can handle it. One of my big practices is defending and representing agents when they're in the hot seat, when they're in hot water. So, for example, it could be an ORA complaint. It can be an issue with a licensing before the Florida Department of Business or Professional Regulation. It could be an arbitration matter, or God forbid, it could be in a court setting. That's about 30 to 50% of my business practice. Luckily this year, the law firm, we've had a great success as a team. We do all of our cases as teams here. So I know I was doing 3 cases with the support of David and Christian Walters and Barry Miller. We had 3 wins against licensing, against attorneys. So the reason why I bring this up is, as you see, the real estate inspection report is to protect the interests of the buyer. So they are fully informed of the investment they're making. So my recommendation is, whenever you work with a buyer and that buyer states, no, don't worry, the house looks great. It's brand new construction. It's only a year old. It's 2 years old. It's fine. It's immaculate. I don't want to spend a couple $4,000 or $5,000, $400 or $500 or the $1,000 on the home inspection report. My recommendation as a litigator, as a defense attorney with 15 years of experience, is to tell your buyers, if you don't want to have an inspection report, that is fine, but put it in writing. Send them an email or have them sign some form of an acknowledgement, because if something does happen in the future, whether it be 6 months after closing or 2 years, you don't want that buyer coming back and saying, I'm unhappy, I didn't know this. You want to protect yourself. And what frustrates me as a litigator when I'm in court is when my client says, I told my buyer that, I told my seller. Great, but do you have anything to support your position, to support your statement? Because when you're in the hot seat, everyone's going to try to cover their rear end and make sure they're protected. But if you have the piece of evidence, you have the email, the text message, now you have actual proof. You don't have to wait for a jury or judge or an arbitrator to test your credibility. You have a contemporaneous text message or email that actually supports you and will vindicate you on that situation.
One of the things that I do to practice this is you just send a quick email after a conversation. Per our conversation, I just want to make sure I understood this correctly. I notified you, or I recommended that you get an inspection. You elected not to. It can be very simple, something as simple as that. Robert also brought up a good point. Even for new home builds, new home builders are not there for the buyers. They are there to make money. They take shortcuts. And all or most new home builder contracts have within their contract the ability for a buyer to elect to have their own personal inspector inspect the property. Again, we understand it's an added cost, but I think 9 times out of 10, if not 10 out of 10, we would recommend doing an inspection even on a new home build.
Absolutely.
Just because one of the other things is they often allow for a punch list. And so if you are not trained in the building or construction of a home, there again, that inspector could more than make up the cost when they might be able to point out things that you wouldn't notice that typically the builder would come back and do through a punch list.
Stay in your lane. It's for your protection. You're the real estate professionals. You're the real estate agents. Show your buyers, your sellers, the homes in the market. Give them your opinion as to the value doing your broker price opinion or any other evaluation methods you use. But when it comes to construction issues or what is a defect or whether you can take down that wall, be careful with what you say. I hear it all the time when I go to open houses. And I remember when I purchased my property, I heard an agent say, oh yeah, you can blow out that wall. Well, how does that agent know whether that wall is structural or not? You don't want to make misrepresentations, whether it's intentional or unintentional, because you don't want to expose yourself to liability. You hear from Barry Miller all the time, stay in your lane, and that is how you become successful. Referring out your clients to the professionals in their respective fields. And like David said, on new home construction, a lot of times people don't want to have the home inspection. It is the biggest mistake they can make. Have your buyers, if they're doing new construction with a developer, have them do a home inspection, because like David said, there may be issues that you as the realtor or your buyer are not trained on. So you want to make sure they're brought up to the developer's attention right away before closing or after closing so that they can be repaired in a timely manner. So I'll let you take this slide, David.
So there are various types of real estate inspections. You have your general home inspection, and that's performed by what we always recommend, a licensed inspector. There is a state licensing certification. Or alternatively, you can use a general contractor. It can be a bit more costly, but obviously this is someone that has considerably more knowledge of the construction process. And so when they do an inspection, they have that much higher level of education and experience to be able to determine what may or may not be an issue for your buyer. Then there's other professionals. There's a number of general home inspectors that might recommend a specialized inspection, which would go further than what that general home inspector is qualified to review and make an evaluation or opinion on.
So what should you do when you're representing a buyer, or if you're even on the seller side and an inspection is going to be done? If you're on the buyer side, you need to speak to the inspector beforehand and ask them, okay, the house is a 3-2, it's 1,800 square feet, 1 story, it's in the subdivision. Ask the inspector, how long do you think it's going to take? And then convey that information back to the listing agent. I just had a call actually, was it today's Wednesday? It must have been either Monday or Friday. My memory's, slipping me right now. And the listing agent was complaining because the buyer's agent was taking like 5 or 6 hours during the inspection. And they were asking me, can I limit it? Can I tell them they only have 1 hour? Well, can you limit it? If you're using the standard as is contract, it doesn't have any time limitations. The buyer can take all day or as long as they need. And what is reasonable? People say, well, David, what's reasonable? That's going to depend on what a judge or jury believes is reasonable. Is a 1 hour inspection or a 3 hour inspection reasonable for a 3-2 home? Is 3 hours reasonable for an 8,000 square foot 2-story lakefront home? You don't know. So it's going to vary from situation to situation. So be proactive. If you're representing the buyer, let the seller know, hey, we have the home inspection. We estimate it's going to be anywhere between 3 and 5 hours.
The other way you can be proactive is learn about the property that your buyer is interested in. What's its history? Check the public records to see if there had been any permitting work that has been done. Also know the age of it. If it was a pre-1978, potentially there's a lead-based paint issue. You may want to bring that up to the inspector. So just be a little bit proactive, 5 or 10 minutes, and you can gather a ton of information that's available in public records. And that just makes you look that much better to your buyer, who ultimately will refer you on and generate more business.
So going back onto the home inspectors, putting my little lawyer cap on since I'm a litigator, how do you protect yourself? So many times I see agents, refer their buyers to a specific home inspector, and that's fine. However, my recommendation is if you're making a referral to a home inspector, please give your buyer options. And again, put it in an email or a text message. I don't prefer text messages just because it's harder to produce. It's easier when it's in an email, but the reality is we do so much business and communications via text message in today's world. But give your buyers choices. Why? I've seen, in my career, a handful of situations where buyers have come back and sued their agents, taking the position, my agent misled me. My agent pushed this home inspector because my agent wanted to get the commission and close the deal. And this home inspector has some type of either business relationship or something underneath the table. And they try to paint these type of pictures of, bad behavior. And a lot of times the agents are just being good people, are just truly saying, look, I found this home inspector. People say he's, good or she's good, and feel free to give them a call. So the intention is good, but you want to make sure that you give them options. Why? Because if you give them options, then the fault goes back onto the buyer. The buyer can't blame you for choosing that home inspector. So like David said, home inspectors can vary. You can have your licensed home inspector, you can have a general contractor, or you can have other professionals. And it's important, every property is going to determine what type of inspector you're going to need and what type of inspections.
So what other kind of inspectors could there be? Wood destroying organisms, your termite inspection. That'll come up under the VA and FHA deals. Chimney inspections, electrical, that's always one of the biggest issues in a home. In fact, my personal, when I was doing shopping, I had an inspector walk us through, my wife and I, and midway through the inspection asked if we had children. And we said, yes, we have small children. He specifically said he had concerns of small children being in that home because of the electrical. Now, we opted out of that contract. There were a number of other reasons, but I was thankful for that inspector was upfront with us, took our ultimate interest and our children's welfare into consideration when he was doing his inspection. He made it very personal to us. But that electrical is a huge thing. Heating and air conditioning. If you have a home that has an older AC unit, vents, ductwork, you may want to have that looked at, because these are added costs to your buyer potentially if they need to upgrade these items. Again, pre-1978, we mentioned lead-based paint inspection. Foundation soil stability. This can be a huge one, especially if you're dealing with someone that might be looking at a waterfront property. We had a case a couple of years ago. We'll get into what is known as Johnson v. Davis, failure to disclosure, later today. But we had a case where a buyer claimed that there was an issue of settlement, meaning the foundation had settled and cracked, and it was due to poor soil underneath the home. And they sued our client, the seller, stating that the seller had knowledge of this and failed to disclose it. Now, we ultimately settled the case, but it was a
tough case.
It was almost 2 years of litigation and considerable legal expense for our seller for an issue that really never should have arisen. But again, one of those other options that you can provide to your buyer, foundation and soil stability, again, particularly for those waterfront homes. Sewer and septic system, also another area that you can investigate in advance and learn whether this property is on sewer or septic. And then of course, sinkhole. You know, anyone that has lived in Central Florida for any amount of time knows that this is a potential hazard that any one of us could face.
Sewer and septic is a great one. You know, a lot of the homes, some homes in the county are on septic system, and you want to make sure not only is the septic system, you know, in good working condition, but where's the drain field? Where's the septic system located? We are encountering over and over, and more so in what I say the rural counties. In, for example, Lake County, I've had 2 cases within the last about 4 or 5 months where the septic system is fine and operational. It's old, it's from the 70s, but still operating fine. But the septic system and drain field actually encroach onto the neighboring parcel, the neighbor's property. Why? Because this is back in the day when there was citrus field, it was more rural, it was unplatted land, and people were just a little more relaxed. So if you're representing a buyer and the home is on a septic system, find out, hey, what's the age of the septic system? What's the life expectancy? Where is the actual septic system located, and where's the drain field? Does it encroach? You know, a lot of times some surveys will not depict that information. You may need to have a septic company come out to actually locate it so that can be shown on the survey. And as a buyer, you really want to know that information.
The other thing, as an agent, never assume. Always check the records, because I happen to live in a neighborhood. It was mostly constructed in the 50s and 60s. Some of the streets have been converted to public sewer, while others, even within the same neighborhood, are still on septic. So you could be living right next door to someone on sewer and you have septic. Again, check the records, do a little bit of investigation on the property, just so you have some knowledge that, again, you can look experienced and knowledgeable to your buyer.
And on the wood destroying organisms, I see most agents are pretty good out there, so I'll give you guys kudos on that. When you're buying a house in, for example, a downtown home, one of these old little bungalows, a craftsman's home, everyone loves them, they're super cute. They've weathered the storms and the hurricanes starting from, I guess, the 1910s, 20s, and 30s when they popped up in downtown. A lot of times agents will put those wood destroying organisms inspections on these older homes. I still encourage buyers to have them even in new construction. A lot of times these homes nowadays are built with concrete block, cinder block, and that's fine. What agents, sometimes people forget is, what about the wood trusses? The roof system is still timber. So you want to have those wood destroying organisms out there, because given with termites and the humidity factor we have in Florida and mold, you just want to make sure that the wood support systems of the home are in good condition for your buyer.
And again, you know, Robert and I are not saying you have to force your buyer to do these things, but it's simply a matter of making them aware and providing them the options. That's what your job is. And at the end of the day, if you provide those options, you have done your job, and there's nothing that can come back against you.
So before we go into the thing about the inspections versus appraisals, I was going to say, when should you get the home inspection done? Well, we all know it needs to be done during the inspection period under your contract. So some contracts, people waive the inspection period. And if that's the case, that is fine. Again, if your buyer is going to waive the inspection, he or she may intend to do so. They may say, you know what, David, it's going to be a tear down. I don't care. I'm going to knock down the home and I'm going to build my dream home on it. That is fine. But if your client is going to waive the inspection period, just document it in an email. Here's the final contract. You're waiving the inspection period. The purchase price is $250 with a closing date of, April 15th. So why do I say to do that? Because I've actually had a case where the real estate agent actually made a mistake in the contract and checked the wrong box. Under the inspection section, she checked box A, which I believe is the box where you waive the inspection period. It was an honest mistake, and it was a cash deal. So the buyer was sort of locked in that contract. The buyer did not have the opportunity to cancel. And the listing agent, that was better for them. I guess whether they knew or didn't know, the listing agent's going to say, hey, they don't want to have an inspection period. Better for my seller. Great. So why send that email? Because then when your buyer gets the email to say, hey, Mary, that's not what I wanted. I wanted a 10-day inspection. So it's a way to double check and make sure you're protected. Because our job here at the closing agent is to make you guys look like a rock star, get the deal closed, and keep you out of hot water. So inspections versus appraisals. David, I'll let you take it.
So appraisal, we've already covered inspection. It's the physical condition of the property, and it is to the benefit of the buyer. The appraisal is for the inspection by a qualified professional to determine the market value of the property. And that's generally governed or dictated by the similarity of properties around it. You've heard of comps, your comparables. This is used to protect the interest of the lender. The lender wants to ensure that the loan to value ratio is within their prescribed limits. So they have to ensure that the value of the home is sufficient for the amount the lender is willing to loan to the buyer for the purchase of the property.
So here's a common question I get, since we're using the as-is contract. We probably get a phone call on this every week from an agent. The appraisal just came back in the day before closing, 2 days before closing. It came back low. What can the buyer do?
Well, first off, we'll get into it later, but did they have the appraisal contingency, and what are the dates that are built into the appraisal contingency to let you know what your rights your buyer may have? There is no general appraisal contingency within the as-is contract. Now, I know there is.
You got it. You're just gonna hit it. There is a general one, but there is an exception clause like you were hinting to, David. There is under the financing provision. So generally speaking, the appraisals, sometimes you see the appraisal addendum on the contract, and we'll touch upon that later on. But most times agents, buyers, sellers, they just don't have the appraisal contingency addendum attached to the contract. It's not part of the deal. Is there still an appraisal contingency like you were hinting on, David? Yes, there is. So under the as-is contract, using my example, if the buyer is notified the day before closing, 2 days before closing, the day of closing, that the home was valued below the loan approval terms, the buyer actually has the right to terminate the contract and receive the deposit. So sellers are obviously unhappy with that language, but that is in there. So if the appraisal comes back below the loan approval terms, the buyer does have the opportunity to get the refund of their deposit. So I just want to show agents of that, because a lot of agents are unfamiliar with that term. So if any of you have the as-is contract with you, I'll just turn over to section 8, and it is section 8, subparagraph B as in boy, subparagraph 7. So it's on page 3, and it's line items 116 through 122. And it states right there in subparagraph 3, starting on line 120, if the appraisal of the property obtained by buyer's lender is insufficient to meet the terms of the loan approval, in which event the buyer shall be refunded the deposit. That section does not have any limitations on the time frame. So the argument is, day of closing, I got my appraisal back, it's insufficient to meet the terms of the loan approval, I'm canceling the contract and I want my deposit back. So for you listing agents out there, what should you do? Well, if I'm representing a seller in a transaction, I want to know, okay, this buyer, David, you're applying for financing. I want to know whether you're going to qualify. We have the loan approval period. The default is 30 days. But if you want to be an aggressive listing agent, you may want to put in your deal and your additional terms, I think it's section 20, that the appraisal must also be done within the loan approval period. So that when that 30-day mark, if you left it blank, you as the seller know for sure, does the buyer qualify? Because as you guys know as agents out there, you get the loan approval, but there's always contingencies on it. So sometimes some listing agents will actually request that loan approval be without any contingencies. No verification of income at the end of the transaction, or appraisal must be done during the loan approval period. Because you want to know, is the home valued at what they say it is?
This may be a good point, a good time also to bring up the buyer and seller representation, because I want to touch on an addendum that we provide. So as many of you are aware, the law firm side, Bear Miller Law, offers buyer and seller representation on a flat fee basis of $9.95. We will represent either a buyer or seller during the whole process of the sale. From a buyer side, we will review or prepare the contract on their behalf. We'll review all the title work and do a title objection letter that gets them a better title policy. And we review all the closing documents to make sure that everything is lined up properly. Similarly on the seller side, but particularly for the seller side, one of the things that we have available when we do a seller representation, and even for our agents, is an addendum that requires the buyer to not only provide whether or not they've gotten loan approval, but the reason that if they get denied, what that was. The whole purpose of that is you don't want that buyer to have sabotaged their loan and simply send you a message that says, I didn't get approved, I'm canceling because of I'm within the loan approval period. The contract itself does not require a buyer to provide why the loan did not get approved.
Correct.
And I believe Barry had a case a couple of years ago, and it was just that matter. It was a several $100,000 case. We ultimately prevailed for the seller and retained the deposit, but it was because the buyer decided just arbitrarily they didn't want to proceed with the contract, and they refused to provide their documents to the lender. We ultimately determined through discovery that it was their inaction of complying with the lender request that caused them to not get the loan, and subsequently the seller prevailed and retained the deposit. But under the contract, the buyer is not required to provide that. So we have an addendum that we provide that requires a buyer to provide the reason why loan approval was not obtained.
Yeah, because here's the question: loan approval. What does that mean? What's good faith? You guys all know the as-is contract states buyer must use good faith. Ask yourself, what's good faith? Does the buyer just go to Bank of America and they deny him, and then he gets to cancel the contract? Is that good faith? Or should the buyer go to Bank of America and Wells Fargo and Morgan Stanley? Should the buyer go to 3 banks? You don't know. There's ambiguities. And so many times we get phone calls, what does this mean? And that's why lawyers always say it's the gray area. And it's going to literally vary from judge to judge, jury to jury, courtroom to courtroom. So that's why our job, when you do a buyer representation or a seller representation, is for us to fine tune the as-is contract. Although it's a FAR bar approved contract, there are mistakes in there. There is this gray area. So when we get retained on the law firm side to represent a party in a transaction, we make sure for whatever side we're working that we fine tune that contract, not only for the buyer or the seller, but for you as the agent as well, so that you have a smooth condition and you're not wasting your time, because time is all you have as agents out there. And it's a precious resource, just like it is for us. And part of the inspections is, well, great thing about the inspections is, most times people think inspection, I'm going to actually inspect the physical home. And that could be the home, the pool, the driveway. But what a lot of times people don't inspect, and it sort of goes hand in hand, is actually what the survey shows. And this ties into inspection, surveys, and buyer's representations that you touched. People, agents, buyers all need to be aware that the price of the home should not dictate the value or the quality of construction or whether there's any encroachments. Barry and I just had a case, not a case, but we were doing a buyer's representation about 2 weeks ago. A very prominent real estate agent in town hired us because he knows the value of having legal representation in a real estate transaction. And it was a large home and a high-priced home, $2.7 million on a golf course. And as part of the buyer's representation was we reviewed the survey. And this home actually had a beautiful concrete fenced wall where the backyard met the golf course. And the fence for about 8 to 10 feet actually veered off the property line and encroached on the golf course. What does that mean? If we would have closed, the golf course owner could have said the day of closing, dear buyer, congratulations on your new home, knock down that concrete wall you have because it encroaches, steps upon my golf course. And if you don't do it, you're going to end up in a lawsuit. But we were able to identify that issue beforehand because we're trained as lawyers to be able to review those surveys and determine whether there are any encroachments there. But luckily, Barry and I were able to approach the golf course owner and we were able to draft an easement. So what did that mean? The golf course owner gave us written legal permission to have our concrete wall go onto his property. Cost him a couple $100, but guess what? It saved him security. When he sells the home in the future, a potential buyer is not going to have that issue. And it provides him peace of mind. So he doesn't have to reconstruct his fence wall because those walls can be extremely expensive. So
special inspection requirements and processes. So we get a lot of questions about VA and FHA loans. Either you're representing a buyer or you have a contract brought in from a buyer. So I brought up the FHA VA addendum, which certainly I highly recommend all of you review. You don't need to understand everything that's in it. That's what we're here to assist with, but at least have a general idea of what is contained within it so that you can explain to your seller if a contract comes in with a VA rider, or if you have a buyer that wants to utilize VA and FHA, how it may or may not impact their ability to have their offer accepted. So a couple of the key things is a separate inspection and appraisal requirement from the Veterans Administration or the FHA. One thing that the agent has the ability of doing, or in fact the buyer has the ability of doing, is putting on an amount that the seller is obligated to pay in order to cover what are known as appraisal repairs. These are repairs that come up through the inspection by the VA or FHA. Now, when we represent a seller, we always put zero. Why should the seller be obligated to pay anything additional? If you're representing a buyer, you may want to put some amount there. It could be a nominal amount, $100, $200, $300. There may be just a small matter that needs to be resolved that could be covered by the seller, but that could go a long way to benefit your buyer and show that you care about your buyer and that you're doing everything in their best interest. Now, one of the things under the FHA financing, this goes into when the appraisal comes in from the FHA, the buyer has the right to cancel. And the language is that a buyer shall not incur any penalty by forfeiture of earnest money deposit. So in the event the appraisal that comes in from the VA is below the purchase price, the buyer has the right to cancel the contract. Now, there are certain requirements upon the buyer. The buyer has a limited amount of time to provide notice to the seller of either they elect to cancel the contract because the appraisal came in below the purchase price, or they elect to continue with the contract and they waive their right contained under the VA inspection requirement. Now, under the VA financing, one of the requirements is for a seller to provide a wood destroying organism inspection. So for whatever reason, the VA has determined a seller is obligated to provide a termite inspection. The other requirements for a seller shall pay WDO inspection, which is the termite inspection, tax service, underwriting, and doc prep fees required by the lender. So these are costs that potentially can be pushed to the seller's side. If you get contracts that come in, same purchase price, one is a commercial lender and one is a VA loan. The commercial lender, they're putting down 20%, and the VA loan, they're coming in with 3%, potentially costs that are going to be pushed to the seller. This is something that you want to present to your seller so that they can make an informed decision. They have the possibility that they will have to absorb additional costs under a VA or FHA loan. Again, when you're representing the seller, you may want to have them review this and put in zero, no obligation for these. Just something to be aware of in these riders, that you have some flexibility, you have some ability to shift some of these costs between the buyer and seller.
So many agents out there, and it's fine. There's nothing wrong with it. Even those with 10, 15, 20 years of experience don't fully understand the VA and FHA riders to the contract, the as-is contract. And that's fine, because guess who drafted those? Attorneys. So they're complicated. And I always tell my agents, for your protection, if you've been practicing for 1 month or you've been practicing for 20 years, if you cannot 100% understand the as-is contract, cannot 100% understand every single rider in your transaction, which I mean an addendum, then you need to tell your buyer or your seller, you need to speak to an attorney, because you're handling the largest financial transaction of that individual's life, whether it be $250,000, $150,000 condo, or a $5 million home in Dr. Phillips, Winter Park, Windermere. You're handling the largest financial transaction of that individual's life. So if you can't understand the contract 100% and get an A+ on an exam, then you need to make sure that that buyer or seller has been advised to seek legal representation. Because think of this, one of these TV attorneys is going to jump on you if something goes wrong. And when you're in that jury box, imagine if you were that buyer and now you're out of pocket, you have a home with mold or mildew, you have a financial mistake on your closing documents. Is that jury going to be sympathetic to you? Probably not. They're going to be sympathetic to the homeowner. So be careful. Not trying to be, we're not trying to scare you, but it is a large financial transaction. And I always tell clients, the analogy is, if you're sick, God forbid, and you need to get surgery, do you want surgery by the medical doctor, the surgeon, or do you want it by the nurse? You want it by the person with the most experience, the most knowledge. So you want it by the doctor, not the nurse. Nurses are great. They do a lot. Thank God for what they've done for us during this pandemic. But think about that self for your liability protection, because a courtroom, an arbitration, an oral proceeding, it's a theatrical proceeding. It's about the presentation, how you deliver your argument, and how the jury or the decision maker is going to see you. So just always keep that in the back of your mind.
And one other thing to think about it from this perspective is, it's funny, we're talking about licensing. Your license, any disciplinary actions are public records, similar to a bar license. If someone wants to look up who they want to use as a real estate agent and you have various issues, whether you had any intent or found liable for any of these issues, the fact that they're out there may make you less desirable as an agent than the next person that has no disciplinary action. So we only tell you these things to cover yourself.
Yep.
Right up front, I know one of the things I always suggest to an agent is send an email. Hey, by the way, I'm happy to assist in any way I can. If you have questions or concerns regarding your contract rights, please consult a real estate attorney. That way, just right from the beginning, you've got yourself covered.
Absolutely. So vetting the inspector. A lot of times this falls back on the buyers, and it should fall back on the buyers. It's about limiting yourself and your exposure. So vetting the inspector, what does that include? Well, licensing. Is that home inspector an actual licensed home inspector under Florida law by the state of Florida? Insurance. Does that home inspector have the required insurance? Commercial, what we call CGL, commercial general liability insurance. Do they have errors and omissions insurance? Do they have workers' compensation insurance? Required disclosures. Are they going to provide you as the buyer with the required information they're required to under Florida law? And the liability of the inspector. Insurance is a big thing. We've been taking this presentation mostly from the perspective of a buyer, but I want to switch roles right now and put my hat on as a seller. If I'm the actual seller or the listing agent. If I'm selling my home and David Berman wants to come in and do a home inspection, let's say David wants to do the inspection himself. And what happens, you're saying, David, you tell me, hey, I'm buying your home. For 5 years when I was a teenager, I helped my dad in his electrical business. I'm not an electrician. I'm a school teacher now, but I know electrical work, so I can do the inspection myself. If you're the seller or you're the listing agent, red flag right there. Why? What happens when David Berman, as the buyer, comes into the property, is fidgeting around with the electrical socket and gets electrocuted? Now he's going to sue you. He's going to sue the seller. So what do you want? You want insurance. You want to know that David Berman or the home inspector has insurance to protect himself. Does he have workers' compensation? Does he have general liability insurance? That protects the seller and the listing agent. So many times I see transactions go forward and listing agents are not asking the buyer's agent, hey, you want to use ABC Home Inspector? Great, not a problem. The home will be made available to you on Monday at 10 a.m. Can you provide me a copy of their license and their insurance? Please, please do that if you're representing the seller. It's for your seller's protection, but for your protection as well. So I'll let you take this slide, David.
So again, I was starting to get into licensing, using the DPR licensee search. Just like you can look up a real estate license, you can look up your inspector's license. Again, investigate your proposed selection of inspectors. See if they have any disciplinary actions. See if they have any other negative comments against them. Sometimes you can find their license in a Better Business Bureau search. These are the things that you certainly want to confirm that they are in fact a licensed provider of inspection services. That should be a bare minimum. But beyond that, you can do additional investigation to see what kind of comments that they might get or feedback that they might get from actual users of their services. And then Florida statute covers the areas that a licensed inspector is required to complete. There are courseworks, they have to pass an examination, and there's a good moral character requirement. Again, I go back to the inspection that I had. My inspector had good moral character. He took my family and our lives into consideration when he was providing an inspection. It wasn't just he showed up, he provided a piece of paper that says XYZ, by the way, this outlet might have a problem. He listened to what our concerns were, and he showed to us where there were potential concerns that we needed to be aware of. That was his moral character, being there to do a service in our best interest. But again, always at least determine at the bare minimum that you are dealing with a licensed inspector. Especially, I guess since about 2008, I mean, there's just been so much unlicensed, unregulated practice of inspections and all services associated with home sales. It's just vital to do a little bit of investigation and analysis of who you may be recommending and who, from a seller side, who is actually performing the inspection.
Because from back on the seller side, not only if there's the personal injury lawsuit perspective of it, but what happens if the work at the home inspector opens a hole in your wall? Who's going to repair it? Yeah, the as-is contract states that the buyer is responsible for repairing any issues with the home that they cause, such as making a hole. But you also want, as a seller, to have the recourse to go against a home inspector. So you want to make sure, do they have insurance? Are they licensed? Are they credible? Things of that nature. You made a great comment, David, about the unlicensed activity. I saw it early on in my career one day. I was in court, and I don't know how the judge, I was probably a second or third year lawyer, a newbie lawyer, and I was in court, and I remember I was going against an attorney. And we get in court, I'm still, I still get nervous in court. And I think if you're not nervous as an attorney every time you're before a judge, you're not doing your work. You need to be on your toes all the time. And I got before the podium, the other attorney was right next to me. I give my whole presentation, and then the judge turns to the next attorney and goes crazy. That attorney was unlicensed, had lost his license a month before, and was still trying to finish off his cases. Well, the Florida Supreme Court had actually suspended his license for a period of time. He wasn't able there to finish off his cases. And it was the unlicensed and unauthorized practice of law. So what I do every time I have a case from that point forward, and it's been 10, 12 years, is I always check a case. If David Berman's going to go against me, I want to know who David Berman is. Is he licensed? How long has he been practicing law? Same thing with home inspectors. Is John Doe with ABC Inspections, is he licensed? It's a quick search in the Department of Business and Professional Regulation website. It takes me maybe 30 seconds to find that information. Same thing with real estate agents. Is the other agent, because we've encountered situations where agents have had their licenses suspended, revoked, or just they didn't renew them, and they're technically practicing real estate illegally. So you want to do that research for your client. It's about that customer service. You may not tell your client, but when your client tells you, hey, John from ABC Inspections is going to be there on Monday, that's who I'm hiring, go the extra mile. When you're on your phone, when you're at Starbucks, just do a quick little search, look at the department's website. Oh, he's still active, or if he's inactive, let your client know, hey, just as a courtesy, I did some research on your home inspector you chose, and his license expired like 2 months ago. Let your buyer then address that issue with the home inspector. That's how you give that stellar customer service. That's how you build a reputation. That's how that buyer is going to say, hey, to their coworker, to their cousin, hey, use Mary, use Alex. They go above and beyond.
And on that note, something Barry likes to point out a lot is while the statutes require certain coursework and examinations for a licensed inspector, I think you can generally do it in about a weekend or about a week-long course. So the other thing you can pursue or investigate is how long has this person been a licensed inspector? Ask them how many inspections they've performed. This might be someone that just got their license last week, has never been in the construction industry, but they read a textbook, and now they're apparently qualified to inspect the 3,000 square foot lakefront home in Windermere. So that's another area that you can look into for your client. Has this business been around for 20 years? They have hundreds of reviews on their website. So again, reputation, licensing, these things matter.
And you want to go with a company, an inspector that has years of experience behind them, that's been around for a while. When the real estate market's hot, we see it in title all the time, for example, and it's frustrating. We see situations where these title companies just pop up because the market is hot right now. And then when there's a crash, it happened during the 2008, 2009, 2010, the Great Recession. All these title companies just closed. And I've encountered, I remember last year in 2020, I think I had 3 transactions where the listing agent says there's a title defect. And I look at the title defect and I go, well, that's fine. We can correct it. Let's just go back to the other title company. And they say they're gone. Well, great thing about the closing agent. Look at our Google reviews. Look how many offices we have. Look how many years we're a staple of the community. So you want that for not only for your seller, your buyer's protection, but for your protection as well. Because when you sell that home in the future, or if you're on the buyer or seller side, if there's a title issue, maybe it's something that can be corrected real quickly by going back to that title company. So same thing with the home inspectors. You want to have someone who has experience, longevity behind them.
On that note, something else Barry points out is, where is your buyer's money going? When a lot of those title companies went out of business, a lot of escrow deposits were lost or just absconded. People went off to Cancun with a couple $100,000 in escrow deposits. So know who you're dealing with, know who your buyer or seller is dealing with.
I love when I see that in the contract and I have a buyer's agent just calls me and they're like, I'm going through the contract. I'm like, who's this ABC company? I've never heard them. You just gave them a $10,000 deposit, earnest money deposit. I don't know who they are. Well, who chose them? Oh, the seller wants that. Okay, you represent the buyer here. Is that company a legitimate company? There is fraud out there. I feel comfortable giving my money to the closing agent. I feel comfortable giving my money to Bank of America for a deposit because it's reputable. So just keep that in mind when you're, doing your contracts and representing your buyers. So insurance, I touched upon that earlier. Florida law requires home inspectors to have insurance. Great. Awesome. Ask your home inspector, have your buyer or you yourself, please provide me a copy of your CGL. You see your general liability coverage. It must be a minimum of $300,000. Are you carrying errors and omissions coverage? Who's it with? What are the terms? These are things that you as a buyer's agent need to be aware of for your buyer's protection. And also as the seller, you want to make sure that they have the required insurance to protect you as well. So required disclosures, David.
So statutorily, inspectors required to, prior to contract for the commencement or the beginning of the home inspection, they have to provide the consumer a copy of their license to practice home inspection in the state and a disclosure that contains the scope of any exclusions of the home inspection. This is key to what the inspection will provide. You as the buyer's agent or the buyer themselves need to inspect thoroughly the contract provided by the inspector, because a number of inspectors have extensive exclusions. One of them often is anything above a second story, and that includes a roof. The roof is considered above a second story, and the inspection contract will simply state this is excluded from the inspection. So right there, off the bat, potentially you want to have your buyer have a separate roof inspection. Oftentimes people don't look at these and they're not aware of it. They get the inspection, think everything is great, get ready to close. 2 weeks after closing, they have a roof leak and go back to their inspector and say, hey, I thought you inspected the house. I thought this was good. The report came back. There were no issues reported on the roof. The inspector simply says, my contract right here says anything above second story is excluded, roof is excluded, or anything else that they might have in there. These are the things that you need to point out to your buyer so that either they can proceed with that inspector and get someone else to cover anything that might be excluded, or select another inspector that covers the areas that your buyer has great concern of. Then liability of the inspector. Again, the inspector's contract is going to do everything it can to limit the inspector's liability. One of the things that is in almost every inspector's contract is limiting the liability to only the fee paid for the inspection. So let's take that scenario where the buyer closes, they now need a roof replaced, $10,000. They go back against the inspector, and the inspector says, oh, you know what? My liability is limited to the $250 you paid me for the inspection. I'll just pay you that. We're done. Have a nice day. These are key aspects that you and your buyer have to look at in the inspector's agreement, because you want to understand what is covered under the inspection, and more importantly, what is not covered under the inspection, so that you know and you can be able to tell your buyer what additional inspections they may want to have so that they can be fully protected and make a fully informed decision whether or not to proceed on the purchase of the property.
And you raise a great point about limiting liability to fee paid for inspection. You're right. Almost all home inspectors put that provision in there. So I see it all the time when these issues arise. There's an issue with the home, $5, $10, $20, $30, $50,000 of a defect, of an issue where the buyer is taking the position. The home inspector should have known that. And the home inspectors and their attorneys push back. Well, you agreed pursuant to the contract that my liability is only $395, $595. To them, it's chump change. So there are possible ways to get around it. It's always going to be fact specific. We have been successful. I know Christian Walters, one of our attorneys here, he had a case 2019, and he was extremely successful in representing the buyer. That buyer was ecstatic with his results, and we were able to go after the home inspector and make a recovery because it was such gross negligence that we were able to show the court, and the court and the party agreed with us, and we were able to make a resolution. So again, the insurance, the qualifications, do your vetting for the home inspector. It's the same vetting that people do with real estate agents. How long have you been practicing? What certifications do you have? How many homes have you dealt? Are you mostly a new home agent? Are you one who has specialty in doing resales? Are you a commercial agent? Do you do mostly land deals? So everyone has their own specialty. You come to me with a parking ticket, don't call me with a parking ticket. Don't know how to handle it. But you come with me with a real estate issue, call me. You come with something with probate, call David Berman. He knows how to handle the probate matters. So just do your vetting. Oh, so I went a little too quick. The FAR bar as is. So we're all familiar with the FAR bar as is section, the property inspection. So I'm going to just read a couple quick issues with the FAR bar that you guys should be aware of.
This section, it's paragraph 12 in the contract. This is probably the key reason we would recommend a buyer always use the FAR bar as is contract.
So one thing is, if left blank, it is 15 days. So little tidbit, when I purchased my home, since I'm a real estate attorney, and most of you agents know out there, I want to make sure that day fell on a weekend, because then it automatically rolled over to the next business day on a Monday at 5 p.m. So even though it said 10 days, it really, and the 10th day I knew when I was preparing the contract with my agent, it actually fell on a Saturday. And the agent's like, are you sure you can get that done in 10 days with your work schedule? I go, well, actually, I have 12 days. I'm going to have Saturday and Sunday and Monday until 5 p.m. So when I was representing myself and working with my agent, it was a great situation. But again, if it's left blank, it's 15 days. Another thing you need to be aware of under the as is, it's the buyer has the right to do the inspection in their sole discretion. That is black and white. So what does that mean?
So this is one of the biggest questions we get. Oh, I'd say, I don't want to say daily, but so often. My buyer wants to cancel the contract. They didn't do an inspection, but we're within the inspection period. Can they cancel? Absolutely. A buyer has no obligation to actually perform an inspection themselves or have a professional inspection. They could be an out-of-state person. They could live in England, never have even touched the United States, never have seen the property other than a picture online. And if they're within their inspection period, they can provide notice to the seller to cancel the contract pursuant to this section and get their deposit back.
So, like, for example, like you're doing the guys in England, never even seen the property. Well, if you try to challenge that from the seller's perspective, real easy, and I'm pretty confident, no lawyer makes a guarantee, but I'm pretty confident that my buyer would win, because I'm just going to say, Judge, we did a Google aerial view and we saw the surrounding neighborhood and we decided we didn't want to do it. We did a Google aerial view of the property and we think we're too close to the neighbor's property. We wanted to cancel. We did a Google review or looked at additional pictures. We realized it's not the floor plan we want. The buyer has absolute sole discretion to terminate the contract. The next issue to be aware of under the as is, that the buyer can do it himself or herself. There's no requirement under the FAR bar that the buyer have to hire a licensed inspector or a general contractor to do the inspection. He or she, the buyer, can do the home inspector itself. So it could be an accountant is going to look at the roof and determine if the roof is viable and has enough life years on it. It doesn't matter. It's in the buyer's sole discretion, and the buyer does not have to do a home inspection. Have to use a home inspector. So one thing we want to point out too is, let me see real quick.
So time frame, you touched upon this. It's either if left blank, it's 15 days, or you can fill in a different amount of time. Termination of the inspection period. One thing that I highly, highly recommend is the agents communicate amongst each other and establish a timeline. All of the dates within the contract are subject to the effective date. The effective date under the FAR bar being the date upon which the contract is fully executed and returned to the other party. I'm not going to go into the details of that, but what I want to suggest is that the buyer and seller agree to a timeline. What is the effective date? What is the expiration of the inspection period? That way everyone is on the same page and you remove ambiguity. One of the things when we do a buyer or seller representation is we have a form that we put in all of the relevant time periods within the FAR bar contract so that everyone is on the same page and knows what to expect when certain things expire, the inspection period, the loan approval period, and things like that.
So one thing I see here, and I found it in the language, we're talking about the insurance and making the repairs to the property as a result of the home inspector or the buyer himself. And that's right there. And it says, buyer shall be responsible for prompt payment for the inspections, for repair of damage to and restoration of the property resulting from such inspections, and shall provide seller with paid receipts for all work done on the property. The preceding provision shall survive termination of contract. So many agents are like, well, what does that mean, survive contract or survive closing? It's a legal maneuver. It's a whole legal doctrine about merger with the deed. We can give a whole class in 2 hours and put most of you to sleep. But what's important is to be aware of, that's the language right there, that the buyer's responsible for any repair or damage to the property caused by him or her or the home inspector. So why do I bring that up? I've seen situations or been in social settings with real estate agents where I hear them say, yeah, I let the home inspector into the home and I left because the home inspector said it was going to take 3 or 4 hours. Well, now you have your home inspector as the buyer's representative in the property. And what happens when you come back 2 days later, you get a call from the listing agent saying your home inspector knocked over that vase on the fireplace mantle. They stained the sofa. They scratched the wood floor when they brought in their equipment, their ladder. So again, putting my defense attorney hat on, my litigation hat is on. When you're there with your home inspector, be there. Allow them into the property, and you should also recommend sometimes that the sellers be there, because therefore you try to reduce the liability or the potential of a claim being made by the seller saying something was damaged during the home inspection period. You know, we try to run an honest and moral life, all of us, but there are people out there who would take advantage of the situation. and then you're there now trying to figure out how do you resolve it. So my recommendation as a real estate attorney is if a home inspector is going to be in the property, someone should be with him or her during the inspection period.
And then finally, if you don't terminate the contract under the inspection period, it's just going to be waived and the buyer would then accept the property in the as-is condition that it is.
So now we have the permits. I'll let you take that one, David.
So there are certain requirements of a seller when it involves permits. Permits are things that are going to come up on a municipal lien search. They're unrecorded documents. You can certainly do some analysis and investigation of this by going to the property appraiser. I know Orange County Property Appraiser has a link where you can pull up permitted activity. You can also contact the municipality directly and see if any permits have been pulled. But the obligation of the seller is to provide any documents associated with work that has been performed on the home, permitted work such as floor plans, estimates of repairs or other work, and it is the buyer's responsibility, if there are open permits, to pay for those. You'll notice the last line of this section, seller shall not be required to expend or become obligated to expend any money. So if your buyer has permitting concerns, they need to understand that while the seller has a duty to cooperate, to sign any applications or documents to close out permits, the seller is not obligated to pay anything. And that's one of the key aspects of the permitting issues.
One thing I see in permits, if you're representing a buyer, so you get the deal done. If your buyer's interested in purchasing a condominium, a condo, let them know, hey, we're going to do the inspection period. I'll assist you with the process. On the permits, you had a question about permits. We'll have to wait for the municipal lien search to come back from the closing agent. That would tell us. Now, a lot of times condos, there's always going to be a permit open. Why? Just let your buyers know, because you're talking about 100 units, 200, 500 apartments, condos there, whether it's residential or commercial. So some other unit owner on the 5th floor is redoing their kitchen and pulled a permit, or they're redoing some electrical work. So you just want to, when you get the municipal lien search and it's a condo situation and you see there's some open permits, take a breath, see whether that permit actually applies to that unit. The association could have pulled a permit because they're going to redo the pool. Well, your buyer's probably not going to care about that permit. So if you see an open permit, don't freak out. Take a breath and ask yourself, does it apply to the unit? So it's 11 o'clock. We've been going for 1 hour. I'm actually going to change it up. We have Michael Wallman here, and he's with Wallman Financial. Going to give him over. Michael, here, join in, and then we'll take a bathroom break.
All right. Good evening, good afternoon, good morning. I'm Michael Wallman. I'm an independent financial planner. I work in a holistic method, and I bring that up because y'all are talking about relationships. I work with accountants, I work with attorneys, and I work with insurance. What's important, what's important is the relationship. Excuse us. The relationship, as I said, working in a holistic atmosphere, I work with attorneys, accountants, insurance folks, and what you brought up was very important. If I call Barry to ask him a question for a client, he will pick up. If I call Candy, one of my accountants, she will pick up. I find that to be very important and weighs a lot in our relationships. Today, I'm going to talk a little bit about tax planning and saving for retirement. But I want to first talk a little bit about pension plans. Pension plans are no longer offered for the most part. Therefore, the onus is now shifted to you to do retirement planning and funding and saving. What does that mean? It's, again, the onus is on you. And do you wish to do that type of plan? Do you want to be a FASBO, a for sale by owner, and do it yourself, or do you wish to work with a professional? When I talk a little bit about taxes and planning for real estate agents, we all know that taxes are a very large component of your liabilities. The end of the year, you earn commission, you're in a high tax bracket, unless you have items other than marketing and so forth that will reduce your income, There is a vehicle that started back in '02, and it was called the individual 401k. It came to a peak in '02, when there was some legislation that allowed small business owners, no employee plus a spouse. Again, solo 401k, also known as an individual 401k, is for owner only, no employee plus a spouse. And I'm going to circle back to that. The individual 401k has three very important components. First one is liberal contribution. Maximum contribution is $62,000, and I'll go over how that is comprised. The second component is a Roth 401k, and I'm going to touch on that as well. The last point of a 401k solo is the ability to remove funds without the tax and without the income being reported. I'm going to touch on that again. The individual 401k, again, large contributions. How is that done? How is a $62,000 contribution created? Well, the individual 401k is you, the employee, and you, the employer. Again, solo 401k, you're both the employer and the employee. What does that mean? As the employee, you are able to defer $19,000 plus a catch-up of $6,000. That is $25,000. Again, employee $25,000 comprised of 19 plus a catch-up if you're over 50. The employer side is a match of 25%. So here's an example. We have Mary that makes $148,000 in compensation. Mary is allowed to put away, again, 19 plus the 6, which is $25,000. Again, Mary is over 50. That's the catch-up of 6. 19 plus 6 is 25. Mary is also the employer. She now has to do, or has the option, the option to do a match, the match of 25%. If she does the maximum, that's $148,000 that she has earned. She can reduce that by 25% of $148,000, which is $37,000. As the employer, Mary can contribute $37,000. As the employee, Mary can contribute $25,000. That's a total of $62,000. That is how we got to that number. Again, as the employee, Mary, she can put away 19 plus her catch-up, which is $25,000. Mary, as the employer, on her income of $148,000 is $37,000. Combined, that's $62,000. $148,000, she's able to put away $62,000. Uncle Sam taxes her at the lower number. That's a savings or a defer of around 40 some odd percent. Taxable income of $148,000, you're able to put in $62,000 in that example. Another example I'm going to use is a part-timer. Part-time real estate agent made $40,000. Same employee, 19 plus 6, because we're over 50. Right off the bat, we have $25,000 we can defer. As the employer, he can defer 25% of the $40,000, which is 10 grand. 10 grand plus the 25 is $35,000. He earned 40. He's able to defer 35. That's an 80-some-odd% reduction or withhold. That's quite a bit of savings. So what I do is I talk to accountants, okay? And I talk to them and say, I want you to show us if we contribute zero, what my tax liability would be. And I go to the client and say, hey, Candy said your tax liability will be X if you contribute zero. Well, tell me what it would be if you contribute just the employee. And Candy will come back and say, okay, if she contributes the 25 as the employee, she'll save X. Her liability will now be X. If, because you are the employee, and this is where the Roth comes in. If you wish, you can direct your contribution to a Roth. Think about that. You, as the employee, can defer your dollars and direct them to a Roth. It will not help you reduce income and save you taxes. So the question is, do you wish to pay now or do you wish to pay later? Depending on your age, I will recommend the Roth. So what does that mean? Again, we go through the calculation with your accountant. Candy, we have Mary who made 148. I'd like you to run the number that should contribute zero. I go back to Mary with you and say, Mary, here's your liability. That's not a palatable number, Michael. Okay. Well, what can I do? Well, you can contribute to this solo 401k. You can contribute up to $62,000. Now what's your tax liability? That's palatable. I'd like to move forward. Or I can say, you know what, Mary? I'd like you to really think strongly about a Roth. If we can fund a Roth, imagine if we fund a Roth for 10 years and you're able to put in that 25 and it incrementally will go up a little bit as the years go on. They're giving you, allowing you to deduct more. If you were to contribute over 10 years to the Roth component of the solo 401k, you will have a pot of money down the road that is tax-free. There's no other vehicle that allow you to contribute to a Roth other than a solo 401k at that amount. Traditional Roths are $6,000 or $7,000. So those are two out of the three components that I like about the individual 401k. Very, very high contribution limits, the ability to fund a Roth, and the third piece, which a lot of real estate agents like. And that is the ability to withdraw funds from your solo 401k without tax or income. Say it again. This is a vehicle that will allow you to contribute and turn around, pull the money out without the 10% penalty and without income. It is not considered income. What is it? It is a loan. You're paying yourself back at a fixed rate over a 5-year period of time. Again, you can remove the funds and you can retire, and this just is recent, college education loans that you've had in the past. I've had agents and clients retire those debts. I've had folks retire high interest credit card debt. Again, this is your money. It is a loan. You're paying yourself back plus interest. What does that do? Well, it also can relieve a lot of debt that's out there. You reduce some debt that's out there, it will also increase your credit score. But what I'd like to talk about with the loans is that is a maximum of $50,000. You're a real estate agent, you know property. Here is a way to fund an account, reduce your taxable liability, and at the same time remove the funds and buy property. That's what a lot of folks are doing at this time. I will then basically sum this up because I want to make sure you clearly understand the three components of this solo. Again, it is owner only, no employees, plus a spouse. Okay? There are no minimums, there are no maximums, there are periods of time that you might not be able to contribute. Okay? So at this time, I'm going to go ahead and see if there are any, excuse me, any questions. Is only the employee portion of the solo going to the Roth? The whole 62, correct? Excuse me, that's accurate. The employee, that's you, can direct all of your contribution, which is 19,000, plus a catch-up if you're over 50, which is 25. That can be directed to your Roth. Any other questions? Again, my name's Michael Waldman, independent financial planner. Any questions? My information's on the screen. I appreciate your time, guys. I thank you so much.
Thank you so much, Michael.
So as you all know, these classes cannot be conducted without sponsors. And Michael Waldman has been a generous sponsor of Barry Miller Law and the Closing Agent for quite some time. I know that Barry has worked with him for numerous years. So Michael, we thank you very much for being a continued sponsor of these classes.
Just one great theme is it's about professionals, it's about customer service. As a real estate agent, I always tell my agents that I work with a lot, you just want to have a list of home inspectors you can refer your buyers to. You want to have a list of all these different professionals, financial advisors such as Michael, medical doctors. What are the good restaurants in the neighborhood? It's about that customer service, because that's how you make yourself look like the professional, competent, and can handle the transaction. And that's how you get new clients, is word of mouth. So let's take a 5-minute bathroom break and we'll be right back. Welcome back. So let's run through. We have about 40 more minutes. We've got some questions. We're going to take them at the end so we can answer everyone's. We want to run through the slides, and please feel free to put your questions up there. If we can't get to it in today's presentation, give us a call. We're here to help. So other condition documents.
So seller disclosure, many of you are familiar with this document, 4 or 5-page document, very helpful for a listing agent and a buyer's agent. If you're the listing agent, I suggest when you meet with your client, you bring this along with you, you help them to prepare this. As a buyer or a buyer's agent, you should absolutely be requesting this document from the seller. We'll get into more specifically Johnson v. Davis, which is a Florida Supreme Court case. But ultimately, a seller has a duty to disclose things that materially affect the value of the property. The benefit of the seller disclosure statement is that it generates those answers for you. It allows your seller to jog their memory. Oh, yeah, we did have that flood 2 years ago, but we repaired it, so let's disclose it, and we'll provide receipts for the work that was done. Again, always have a buyer request a seller disclosure.
Question we always get. Let's see if you know it. Must a seller use the seller disclosure form?
No.
Correct. Agents always think, well, they won't give me the seller disclosure form. There is no requirement that a seller use that form. However, it's best practice. It was created there to make it easier for your sellers. The sellers under Johnson v. Davis, which we'll touch upon on the next slide, requires that the seller just disclose to the buyer material facts. Disclose. Doesn't say it must be in writing. It can be an oral communication. Again, for everyone's protection, document your files, use the seller's disclosure.
As Barry always recommends, if you're representing a seller, disclose. You are always better off disclosing than having something come back against you after the fact for failing to disclose. The other big benefit of using the seller disclosure, especially on the buyer side, is once you get your inspection report back, compare what was on the inspection report to what's on the disclosure. Was there something that the seller disclosed that the inspector didn't notice? And so now you may want to go back to the inspector and say, hey, this might have clearly been an issue. Did you miss it? Or alternatively, you might find something on the inspection report that was not disclosed. And of course, you immediately want to go back to the seller and say, hey, look, my inspector found this whole room flooded. What's going on here? You didn't say anything about water damage. In fact, you said there was none. so you can get an explanation of what's going on. What is the discrepancy between these two documents?
And make sure when you're representing the buyer, give your buyer's inspector a copy of the seller's disclosure. When they're doing that inspection, you want that inspector to have all the information about that property. So give them a copy so they can look at, inspect those issues that are disclosed on the seller's disclosure. So, let me see, did I go a little too far?
There we
go.
So we kind of covered that already.
Here we go. The right to cancel, we discussed that issue already. Now we have the property inspection, as we discussed earlier today, the 15 days of left blank, and the buyer's sole discretion. Potential issues. We have the FAR bar as is, mold. Mold is a natural occurring event. Every home in Florida has mold. Mold is not something you necessarily need to be afraid of. It depends what type of mold is there, what quantities of mold is there. Every home is going to have mold. It's a natural occurring thing in Florida with the humidity and rain we have. Chinese drywall. I think a lot of agents should be using this form more, but they don't. As we all know, back around the early 2000s, between like about 2001 through 2008, there was a lot of import of Chinese drywall that had toxic levels of chemicals and materials in them. I would put that, if I represent a buyer, I would use that addendum, especially if the home was built. So a lot of the homes in like East Orlando, a lot of that Avalon Park, Waterford Lakes, those subdivisions there, most of them, from my understanding, don't have it. But for the buyer's protection, if the home was built between 1995 and I say 2010, 2012, I would just throw the addendum in there. It shouldn't cause any issue. It gives your buyer additional protection. Radon gas. The radon gas disclosure is required under Florida statute to be there. It's already built into the as-is disclosure. I personally have never encountered that issue in any real estate transaction.
I've not either. Touching on the mold real quick. Now, even in a new home construction, everyone knows homes built in Florida are all under the same conditions. Whether it's an old home or a new home, there's going to be a ton of moisture during the construction process. And everyone knows it does not take long for mold to form. Now, again, as Robert said, it depends on the type of mold. Generally, there's not going to be an issue, but we did have a case where a client came to us. They were a buyer. They had a particular susceptibility to a form of mold. Their agent was aware of this, and their agent failed to take appropriate precautions, make the recommendation for a mold inspection. So their agent, I don't recall if they were ultimately held liable. I think they resolved it privately. But when you have special knowledge about someone's concerns or conditions, that may put you on a heightened requirement to either disclose information to your buyer or provide additional documentation or request of information to a seller. So again, this is all about that relationship building with your seller or buyer, knowing what their primary concerns are, knowing how you may be able to assist them in getting the right home for them.
So right. Johnson v. Davis, we spoke of. Johnson v. Davis is a Florida Supreme Court case. Back in the day, going little mini law school property class, it used to be, some of you may have heard the Latin term, caveat emptor, buyer beware. Well, you take the property as is. Well, the Supreme Court retracted that and said with residential construction, the seller needs to disclose to a buyer material defects that affect the value of the home. Well, again, what is material? It's a gray area. It's going to vary from judge to judge, jury to jury. So be proactive, disclose more, because think, if you're in that jury box, is the jury going to sympathize with the seller or with the home buyer who now has mold in his house or can't live in the home? So just be protective of your buyer and of your seller. One thing I always recommend is we use the seller disclosure form. Have your sellers update the form. I had a case in Windermere several years ago, multi-million-dollar home. It was somewhere in the, I think, in the $4 to $5 million price range. The home sat on the market after the recession for about 4 years. As we all know, the market wasn't moving, especially the higher end homes. Lenders weren't lending. And the seller disclosure that was used was over 2 years old. There had been additional hurricanes, rainstorms. The home was vacant during that time. and everyone got sued in that case. It was also a failure to disclose issue. So that's why I tell my listing agents, make sure your buyers update the seller's disclosure form if it's more than a week old. Document the file, let them know, hey, has there been any change in the seller's disclosure? Please review it before we, sign the contract with the buyer.
So, and just so everyone's aware, Johnson v. Davis, it is a Florida Supreme Court case, which means this is applicable across the state of Florida. There is no higher court or overturning this particular law. The language is contained in the FAR contract. It's section 10J. Seller knows of no facts materially affect the value of real property which are not readily observable to the buyer and which have not been disclosed to the buyer. This exact language is also contained with a reference to this case on the seller disclosure. But key to agents, recently, I believe it was about 2 years ago, a case extended the Johnson v. Davis liability to agents and brokers. If you are an agent that represents a seller and you know of a fact that materially affects the value of the property and your seller tells you, I don't want to disclose that, you now are potentially exposed to liability of that buyer coming back after the fact, suing the seller and including you and your broker in a lawsuit for failing to disclose something. So while this was only with the homeowner, it has been extended to include liability to agents and brokers. And obviously, if you're bringing a lawsuit, who do you go after? Anyone and everyone that has money available.
So one thing I always tell my agents is, when you look at the MLS, don't just only look at the MLS for the current listing. Go back in the history, see if there's any disclosures there. Maybe those issues have been remedied, but you want to notify your buyer. So the button's a hot button today. So agent's role, what is the real estate agent's role in the inspections? So David?
So we've kind of touched upon a number of these things. When you are representing a buyer, you potentially want to be there in person when the inspector is there, not only to be able to advise the inspector of areas that you may have concern or your buyer may have concern about, but also to protect your buyer from any issue that the inspector may cause, any harm that the inspector may cause. Also, knowing specifically what your role is, understanding the documents that you're assisting your buyer to prepare and provide to the seller.
And also any addendums that are needed.
Right.
So you do the inspection. We all know, we all use the as-is contract, which is sort of now been diminished because it's no longer as-is. Buyers are always coming back and saying, I want these repairs. It's just been the custom now that in the last 10, 15 years. So we have to go, buyer comes back and says, I want to replace the roof. Now we need an addendum. Seller shall replace the roof. Now that language right there, we see it all the time. And the intention is good between the agents, but legally insufficient. That's a great thing about the closing agent. You guys have access to us. You have an access to a full staff of attorneys to answer your questions. When it's simple, give us a call, because if it's 5-10 minutes of our time, there's no charge. No charge for simple legal questions. What is wrong with the addendum language? Seller shall replace roof. There is a whole host of issues. And this, I'm using the roof as an example because we see it with so many other items with a home. But take this as an example and extend it out to all repairs you're doing on behalf of your buyer. So seller shall replace roof. First, when is the seller going to replace the roof? The intent is before closing most of the time, but it's not there. It doesn't say it. Sometimes agents do say seller shall replace roof prior to closing. Good. So time frame. When is the repair going to be made? Number two, who is going to perform the inspection? Oh, I'm going to hire my cousin Pepito. He does roofing, and he doesn't, he did when he was a kid. He knows how to do it. We changed the roof. No, I'm sure your buyer's not going to be happy with that. You want to make sure that's a licensed and insured contractor, a licensed and insured roofer. What about warranty? Is that warranty only going to be good to the seller, and does it terminate, or does that warranty transfer to the buyer? If it does transfer, is there a transfer fee? Who's paying for that fee? Is the seller going to provide the buyers with the right to inspect the property to see whether the repairs were done properly? When are those inspections going to be done. And using a roof issue, we had a case once, probably about 2 or 3 years ago. Seller shall replace roof prior to closing. Literally, that's what it said. You guys have all seen the language out there. This home wasn't a homeowner association. So what did this seller do? It was a tiled barreled roof. And my understanding, those roofs are pretty expensive and costly versus a shingle roof. But the roofs do last supposedly a lot longer. The seller took off the tiled barrel roof, put on a shingled roof, an architectural shingle roof, which was like 1/3 of the cost. I think the seller paid like $7,000, $8,000 on the new roof, while if he would have replaced it with a tiled barrel roof, the same type, it would have been like a $20,000, $25,000 roof repair. So at closing, the buyer's like, well, he didn't put the same roof on. Well, where does the contract require that? Also, if you're within a homeowner association, and this was another issue, it was the day of closing, and the seller received a notification from the homeowner association stating not only is it not the same roof, the tiled barrel roof, the shingle roof you put on does not meet the color scheme of the homeowner association. And the seller was saying, I don't care, buyer, close the transaction today or you're going to be in default. There's a whole host of legal issues that we can help sort out if we're representing the buyer or seller. But those are the things that after the inspection, the agents need to be aware of when they're drafting the additional terms. You hear it from me, you hear it from David, you hear it from Barry Miller. Agents need to be careful. They get into hot water all the time with those additional terms section. So no matter how much experience you have an attorney in your back pocket. Call the closing agent. That is our strength. We're an attorney-backed title company. Handle yourself in a professional manner so that your buyer and seller are protected and that you're protected. So the reinspection and walkthrough, as under the as-is contract, that buyer has the right to inspect the property the day before or the day of closing to make sure the property has been maintained in the as-is condition. So what does that mean? You know, you have a beautiful landscape yard, a beautiful pool, crystal blue water. The seller can't all of a sudden just say, okay, I'm selling this home. I'm going to save the $300 bill between the landscaper and the pool guy. And now the pool's green. The yard is not maintained. There's weeds everywhere. That's what the as-is requirement is for. And that is what allows the buyer the opportunity to do the pre-closing walkthrough to make sure the home is in the condition. If your buyer is not going to do the pre-walkthrough inspection, I would highly recommend that you document that in an email.
So one other thing, when the seller does make repairs, and we just talked about this, your addendum should include that right to re-inspect the work. If you don't include that, then great, they did the work, but you have no idea on behalf of your buyer whether it was done satisfactorily.
We had a case, and it wasn't a case, just a situation that showed up. Had an agent call me back in 2018. And the situation was, it was a buyer's agent. Buyer called me and said, we just closed the transaction and we just went to the property. It was a condo downtown to celebrate. I went to the property with my buyer and his fiance to celebrate. And we walked in and the floors were all wet. The windows in this high-rise condo had failed. And my first question was to this buyer's agent, did you do a pre-closing walkthrough? And she's like, no, we didn't do it. I'm like, see, these are the opportunities where had you done the pre-closing walkthrough, which, you know, this condo is only blocks from the downtown office, you would have walked in, noticed a flood, noticed that the windows are failing, and you could have addressed that issue with the seller. Now the buyer was in a predicament. So always exercise that pre-closing walkthrough. So we went through the break here. So the appraisals, again, as we stated earlier, the difference between an appraisal and the inspection is the appraisal shows the market value. The lender's going to want to know the loan to value, if it's a wise investment. Do they have enough collateral secured so that when they do give you the loan, the bank's investment is protected? Vetting the appraiser, you have to also vet the appraiser. A lot of times the appraiser is just going to be sent out by the lender. However, if you're doing the appraisal addendum, you know, using that as an additional protection here, addendum F, you want to make sure that appraiser has the qualifications, the license, and the experience. A lot of the appraisal contingency, some of you are aware of this. It allows the buyer to cancel the contract if the property does not meet a specific purchase price or specific agreed upon price within the contract. They have 3 days after the date set forth in the appraisal contingency.
Now, one thing with this, when you use the appraisal contingency, you want to keep an eye on the dates. Sometimes people want to do a very quick closing, maybe it's a cash purchase, or if the person has a loan and they want the appraisal contingency, they put the date to actually occur after the closing date, which gives the buyer the right to cancel basically anytime up to and after closing based on the appraisal coming back too low. So again, games can be played. You want to understand what the documents state, and based on you really want to look at the dates and understand where they fall within the time frame of your scheduled closing. Again, that's where that timeline comes in that we suggest you prepare at the beginning of a contract so that all parties are aware of the important dates during the process of the closing.
And that's one of the great things we do as part of that buyer or seller representation is we prepare the timelines. So many times agents tell me, well, I do my own timeline. And I go, well, show me it. And there's like 3 dates on there. There's like the effective date, then there's the inspection date, and the closing date. Well, if you take the time and review the as-is contract, you'll see there's a lot of other dates in there that we have used as attorneys to get buyers and sellers out of contract. And so that's the benefit of using the closing agent. That's the benefit of doing the buyers or sellers representation. There's a lot of other deadlines in there that agents need to be aware of. Take the time tonight, review the contract. And if you don't want to review the contract, you need to tell your buyer or seller, I'm not reviewing this contract. Call Barry Miller. So the sample appraisal, I believe they have some of the addendums. The appraisal inspection report, some of you guys have all seen it. You see here a copy right now. There's different approaches. Appraisers are also licensed professionals. They have to take a certification exam with the state of Florida. There's different ways and approaches in which an appraiser can evaluate a property. Show you real quick. And this is outside right now of our expertise as lawyers. We sometimes bring in appraisers as expert witnesses if a case calls for one. But there's the sales comparison approach, there's the cost approach, and then there's the income approach. Those are the 3 different methods. An appraiser can give their whole class about how these methods change. But you just want to be aware of that. You want to be aware in the contract. Does the buyer need to provide the inspector with a copy of the appraisal report? So next slide. I think we're almost getting toward the end. So actually we are right now at the end. So it is 11:45, perfect timing. Let's take some questions, David. And again, if we can't get to all of your questions, feel free to give me, Robert Garcia, give David Berman a call, or ask to speak to any of our attorneys here at the closing agent.
All right. So what happens if the buyer wants a shorter inspection period to beat out other buyers? So as Robert stated, if you put nothing in the blank, it defaults to 15 days. If you want a shorter period, just write in a shorter period. 1 day, 5 days, 0 days. What I recommend, if you do use 0 days, and in essence, your buyer is waiving any inspection period, spell out 0, because if you just put it, the number 0, it can be altered. You just never know. But absolutely, your buyer has the right to reduce that inspection period from the pre-printed 15-day default.
Absolutely. So it's just a business decision. It's a strategy. That's what you guys are the professionals on. You guys are the negotiators to get the deal to the table.
And if your buyer does want a shortened inspection period, make sure you already have talked to them about having an inspector lined up. Because if they're having that shortened period, you want that inspector in there day 1 or day 2, because some inspectors take an additional day, 2, maybe 3 days to turn around their report. And so if your buyer doesn't get the report until that 6th day and it has something huge on it, but they did a 5-day inspection period, then they've lost that ability to cancel. So if you are doing a shortened inspection period, just make sure all your ducks are in a row and you're ready to go with that inspection as soon as you get under contract.
Yeah, and great thing about that, you bring a great point, David, is when you're working with buyers, our deals make you guys look like the rock stars. Let's get these deals done. You guys are the ones who've carried the entire country literally through the worst pandemic in over 100 years. So we want to get these deals done. We want to keep the economy strong. So when, as a buyer's agent, when the buyer calls you, hey, John, I'm interested in buying a house. You know, me and my wife are interested in buying a house. Well, be proactive. Tell your buyer, do you know who your lender are? Do you have all your documents ready? Do you have your tax returns for the last 3 or 4 years, your W-2s, all those financial documents? Have them ready. Do you know which home inspector you're going to want? You know, have a list ready provided to them, or ask them who are they going to use. You want to have that stuff ready to go. So when they're ready to make the offer in, they say, I know who my home inspector is. I'm going to give them a call right now that we're under contract. So next question. Don't new homes come with builder warranty, roof structure, appliances from the manufacturer? Well, great question. Yes, assuming you're doing your standard builder's contract, yes, there is a warranty. And I'm going to break down this question. So does new homes come with a builder's warranty? Yes, you have to look at the contract to see exactly. Generally speaking, yes, new construction does come with a builder's warranty. Next question is, what does that builder's warranty cover? Is it a 210? Is it a 1-year limitation? You have to look at what that warranty covers. Most buyers and most agents don't know and understand what the warranty is. It's complicated legal language. You got to look into it.
The other thing in new home builder contracts, they will have a whole section disclaiming any and all warranties that they possibly can. Some of these are upheld in court, some are overruled by a court saying that they are too substantial of disclaimer, but be aware that even though they're providing a warranty, they will do everything they can to disclaim as much liability as possible.
Correct. So for example, new construction, it'd be like the warranty and representations made by the sales agent. Never, never, never rely on the sales agent. They're sweet and nice and they're great people, but it's a sales job. So when you're at that sales office and that custom home office, they're going to try to say whatever it is to get the deal done. Oh, don't worry. Oh, we take care of those issues. Don't worry. We're great at that. Oh, yeah, we'll put that granite countertop in. Or, well, don't worry. I'm going to upgrade from the granite to the quartz. Not a problem. You guys have been fantastic. Your job as the agent, please put it in writing. If they don't put it in writing, whatever they say does not matter. So that's why agents tell me, well, they said this. It doesn't matter. It's not in the contract. And the contract has bold and in caps. Buyer cannot rely on the oral statements or representations of anyone. If it's not in the contract, it doesn't govern. So again, as a buyer's agent, be cautious. They may have good intent, but you know, people change companies. That sales agent, she may have been truthful and honest, but she's no longer with that builder. Now she's with a different company and you can't track her down.
And know who you're dealing with, because new home builders, their sales agents typically cannot bind the company. If you look in the contract, it'll usually state, oftentimes it's regional vice president. No contract or amendments thereto are binding upon the home builder unless executed and agreed to by regional vice president so-and-so or a higher level person than the person that's at that sales office. So understand, even when this person is signing something in their sales office, that even may not protect your buyer. Look at the document itself and know who has to agree to the terms that you and your buyer have negotiated with this home builder.
So part of that question is, isn't the new home covers the roof structure? Generally speaking, yes. Is it a structural issue or a non-structural issue? Can I tell you what it is? No. Who it will? It's going to be a general contractor or an engineer. That's what we call in litigation the battle of the experts. One side is going to say this is a structural issue, and another side is going to say it is not, especially in those gray areas. Construction has gray areas as well. Is the seller, is the builder going to take the issue? Your roof is having an issue because it's not damaged, it's not a structural issue. You had a hailstorm which caused a shingle to knock off and now water's coming into the home. That's something apart from us that we're not responsible. And then the buyer is saying, or the homeowner now is saying, no, that's not the cause, it's this. Now you have a discrepancy. That's when you get into litigation. So there's all these issues. As to appliances, whoever asked that question, obviously you've been doing some new home construction. Generally speaking, the builder does not warranty any of the appliances. Like David said, the builder passes the warranty from the manufacturer onto the consumer, the buyer. Question becomes, when does that warranty expire? Is it when the builder purchased the 100 refrigerators, or is it when that refrigerator is ultimately sold to the end consumer, the homeowner? Next question, talking about cost. A roof that's over 10 years old will cost more now for the homeowner's insurance. Well, generally speaking, instead of, was that part 2 of a question?
I think it's more a statement.
A statement. Yeah, generally speaking, yes, the older the roof is, the more difficult the insurance is going to be. I know a lot of the downtown homes, those mid-century 1950s homes in the Conway, Audubon Park neighborhoods, a lot of them are flat roofs. Insurance companies hate them. Shingle roofs, companies prefer, but if the pitch roofs, insurance companies prefer. But as the roof gets older, as we all know, securing insurance gets more difficult, and it gets more costly. One thing I will say is when buyers say, well, I can't secure insurance. I've been involved in the insurance industry for over about 12, 13 years. Generally speaking, a buyer can secure insurance, even if that roof is super old. The problem is it's going to be expensive. And you have to go to different underwriters or different classifications of insurance companies, Lloyd's of London's versus, let's say, a State Farm or a Geico. So lots of time you can get insurance, it's just going to be pricey.
Instead of a home inspection, can a buyer be happy with the information from 4-point and wind mitigation? While these particular sort of abbreviated inspections can provide some discounts on your homeowner's insurance, I would not recommend to your buyer that you rely on that as a replacement of the inspection because they just are not as extensive as what a full home inspection would provide.
Next question, can you talk a little about re-inspections and how to word that on the repair addendum? Great question. I believe we have a standard form on our website.
We have a repair addendum. It addresses much of the things that we talked about, specifically requiring that it's licensed and insured contractors that do the work, providing for a time frame within which to perform the work, making sure that there's a re-inspection period for the buyer. David, can you confirm is that it is available on the closing agent? So the closingagent.com/addendums, it should be titled buyer repair addendum, something to that effect.
I'm asking all the agents, everyone who's on this seminar today, do me a favor. When you're sitting at home tonight and you're playing on your iPhone, sitting on the couch with your husband, your wife, your significant other, your kid, go to the closing agent's website, spend 5 minutes. There is so much knowledge and resources out there. We have spent countless hours, countless weekends, and Barry Miller has spent 20 years to develop this to make your lives easier. Seriously, there's so much information out there to make your life easier, protect you, and help you succeed in your business. So take the 5 minutes and just look at the website. There's so much information that you guys will be like, geez, wow, this is great. There's so much deposit language. There's all these addendums out there that are great resources.
And one of the things Barry is so strong and adamant about is being a good neighborhood partner. If anyone knows him, you know his involvement in the 49 Fund, getting that started since the Pulse tragedy. He wants to partner with people. And so part of that is partnering with the agents that work with us. That's why he provides all of this valuable information at no cost to agents. All it is a matter of a few minutes to look over some of the documents that are available, and you'll understand why the closing agent and Barry Miller Law is here to support you in your business.
So next question, assume the seller made repairs due to the inspection and the home does not appraise. Is the buyer still entitled to the entire earnest money deposit? Answer, generally speaking, in a very general sense, yes. The buyer still would be entitled to the deposit. And if I pull my contract up real quick, again, it's going to be under Section 8, the financing, that runs over on page 3, lines 115 through 121. That's where it allows the buyer, if the appraisal comes back lower, then the buyer is entitled to the deposit. Next question, is there a seller's disclosure to protect buyers for cast iron pipes failing? I have encountered this issue for my buyer a couple years after purchase. In Broward County, buyers are scoping for cast iron pipe integrity. I encountered this when I sold my mother's house in Pompano Beach to the tune of $20,000. Well, does the seller's disclosure disclose? I believe I know it's been revised, well, last decade in 2010. I think there was like a 13 and like a 17 or a 19 version. You'll see that the copyright in the bottom left of the document, same thing with the as is. Off the top of my head, I don't think there's a specific section that addresses cast iron pipes. There does, I believe, have a section that discusses plumbing issues.
Right.
So that may fall in there. And whoever that agent is, it is sort of correct. One of my best friends is a real estate agent down in Miami, and he tells me this all the time too, that I guess in Miami and Broward, this cast iron pipes issues from homes built in the 50s is really a hot topic. And I think I've even seen a class action commercial.
I think there's a number of class action suits. Some of the things that you can do to address it, obviously, if you have that thought in advance, ask the seller, what is the type of piping? Also, investigate the possibility of a home warranty that might provide coverage for that, or your homeowner's insurance. Be sure that you have your buyer review and see what potential coverage there is, or if there's a rider for cast iron pipes and flooding caused by cast iron pipes.
Next question, is a seller in a VA loan obligated to pay any buyer's costs? Like David mentioned, it depends on what the writer says. It may state in there that the parties negotiated that after the inspection that the seller is not going to make any repairs and not going to contribute any financial information, any financial contribution to the transaction. So next one, what do we?
Hold on, I think you skipped. Can a VA buyer give up the appraisal contingency? What happens if he changes his mind before closing? Can they then enforce the VA rider? So the VA rider specifically states, once you get that appraisal back, if it is below the purchase price or whatever price the parties put into that document, I believe it's a 3-day window. You'll need to confirm on the rider, but I believe the buyer has 3 days within which to provide to the seller within writing, electing either canceling the contract or proceeding with the contract, thereby waiving the appraisal contingency.
Next one, what do we do if the buyer does want to participate in the inspection? The contract doesn't require that they have a license, right? Using the as-is contract, first, the buyer does not have to do an inspection. Second, the buyer can do the inspection himself or hire a professional. And third, the contract does not require that the buyer or the inspector have a specific license. But if your buyer is going to hire and pay a third party as a professional to do the inspection, that's where we discuss the vetting procedure. Make sure that third party vendor is licensed to do what he or she agrees. Then it says, how do we handle that as the seller or the seller's agent? Don't really understand where that question or what the intent is.
Maybe because we were talking about liability of people coming into the property earlier. And if the question is, what is the concern if the buyer who is a non-licensed person, non-licensed inspector is performing some form of a license? Again, potentially you as the listing agent may just want to be available on the property. You don't need to follow them around everywhere, but just be available on the property to be able to know if any improper activity is taking place or if any damage is caused. And from a buyer's side, if a listing agent is there, you may want to walk through the property with the listing agent at the conclusion of the inspection, just so that the listing agent can be aware there was no damage caused by the inspector or by the buyer. So everyone's on the same page and there's no miscommunication. Like Robert was saying earlier, there could be some potential inappropriate or unethical activity on a seller side saying, well, this was damaged by the buyer or the buyer's inspector.
Next question, if a buyer accepts the inspection report, how is he responsible for improvements required by the lender? I see this all the time, and I was the subject of it personally. When I bought my home downtown, it was an old home. It was like a 1950s, ranch home. And the electrical panel was one of those old Florida Pacific panels. All of you agents know that out there. Insurance companies hate it. And insurance companies and lenders. My lender just made it as a condition to closing, saying they were going to give me my loan so that I could close, but that I had to make the repair and switch out the panel. I think it was like 30 days from the closing date. I already had an electrician lined up, so it wasn't that much of a big deal. But if I didn't, I would be in default of my note, of my mortgage, and they could technically foreclose. But it would all depend upon what the lender requires. And that's when your buyer should, if your lender is making specific conditions, that buyer really should be calling us saying, hey, Robert, hey, David, I need you guys to review these loan documents because I don't understand it. It's sort of, we're so used to it because we're so trained, but it amazes me how buyers are signing loan documents, 50, 60, 70 pages, single space, font 8, and
legal size paper.
Legal size paper for $200, $300, $1 million transactions, and they just sign. And these documents are normally given to the buyer beforehand. And I asked buyers, did you have these reviewed? No. It's just shocking to me that people spend more time shopping around and doing due diligence and deciding what car to buy or what TV than when they buy a house. So just educate your buyers, make sure they're protected.
So do you recommend sending escrow deposits to the closing agent as a buyer agent, even if we are not closing with the closing agent? Okay, so a couple things on the contract. You'll see in the first section, there is listed an escrow agent. That is the company or person that holds the escrow deposit. So whoever that entity is where the escrow deposit would go. When we do a buyer or seller representation, because the contract isn't specifically clear, we add an additional terms, escrow, title, and closing agent shall be the closing agent, so that all parties fully understand the closing agent is holding the escrow deposit, the closing agent is also performing the title search and performing the closing. That way everyone is on the same page. There's no confusion about where's the money going and who's holding it.
And that's a great question. Sometimes a lot of agents think the closing agent, the escrow agent are one and the same. Legally and technically speaking, they're two separate items. We here at the closing agent, we have provided that courtesy and providing escrow services. So when you get your listing and you want to close with the closing agent, we will hold the buyer's deposit as part of our customer service for the entire transaction. But generally speaking, it can be A and B. It could be two different people. So next question.
What are the buyer's rights should there be issues during the walkthrough? So first, go look at the contract. The seller has a duty to maintain. So the walkthrough is not a re-inspection period where the buyer can cancel for any reason. It's simply a time where the buyer can ensure that the seller maintained the property in the condition that it was when they entered into the contract. And if it's not, at that point, then they can address with the seller possibly extending the contract or getting a credit back for any damage or resulting inability of the seller to maintain the property.
Next one, should a listing agent attend the inspection? Should a listing agent attend the inspection? Me personally, my opinion, it's all business dealing, so you guys get to decide how you want to handle it. I say yes, because it's a second set of eyes. You are the representative of the seller. So you're allowing, first of all, a stranger into someone else's house, into your client's house. B, if something happens during the inspection, do you want two stories? You want, David Berman's going to say he was electrocuted because he just, touched the outside of an electrical plate. Or you as the listing agent want to tell the judge, no, David got electrocuted because he was negligent. He was reckless. He stuck his hand in a screwdriver right into the electrical outlet. Now you have two different stories. So me personally, if I was selling my home, I would want my listing agent to be there. They are my representative and it's part of the compensation I believe you're being paid for. Should the seller be present?
And in that regard, and I'll kind of address, should the seller be present? Bear in mind also, we need to be reasonable. If you're the listing agent, the inspector is there on behalf of the buyer. Oftentimes, inspectors will not discuss matters that they determine on the inspection with the listing agent or the seller, because it is their duty to provide this report to the buyer. At that point, the buyer has the ability to then come back to the seller and say, this is what I found. But what we're talking about is simply the ability to monitor the progress or the activities of the inspector. It's not necessarily to be looking over their shoulder and in fact participating in the inspection process. Whether the seller should be there or not, in all honesty, an inspection usually takes, on a standard size home around here, 3 to 4 hours. So, if the seller has 3 to 4 hours to hang out, it's their house. They technically can be there. But again, they should be respectful and mindful that that inspector is there on behalf of the buyer, and they need to perform a service that the buyer is paying for. So again, just understand the relationship.
Is there a minimum and or maximum price limit that the inspector can charge? I don't believe there is. I think it's just a free market, and it varies. I know home inspectors, I've seen it in their pricing schedule. Is it 1 story, 2 story? A lot of times they'll frame it, if it's a condo, it's normally less than a single family home. The square footage. So it all depends on a variety of factors and variables. I don't believe there is a maximum or a minimum on price range.
So I know we're over the time. Let's get through some questions as quickly as we can. There's one, can you discuss the escalation clause? That's really more for our contracts and addendums class. So whoever asked that, if you want to call in, maybe we can have a separate conversation for a couple minutes about that. Do lenders require inspections?
Generally speaking, I haven't seen they require appraisals because the lender's the one who's giving the money. And remember, the inspection is about the physical condition of the property, and the appraisal is about the market value of the property. But yes, sometimes lenders do require, as part of the appraisal, they was find stuff such as, I remember in my personal situation, it was a Florida Pacific panel. The lender did not want to make the loan unless I changed out the electrical panel to a new one. So do they require necessarily an inspection? I've never seen a lender require, you must have an inspection report done, but I have seen lenders require that buyers make certain alterations to a property in order to secure the loan.
And bear in mind, a lender is going to require an appraisal. Part of that appraisal is an inspection. The appraiser has to go to the property to, quote unquote, inspect the property to determine how it compares to the comparables, but it is separate and distinct from an inspection provided for the benefit of the buyer. The appraisal is for the benefit of the lender. The inspection is for the benefit of the buyer.
So what recourse does a buyer have in the event the contract is canceled before the end of the inspection period and seller refuses to sign the release and cancellation? We get, what is that? It's an escrow dispute. We deal with them all the time. Traditionally, under the contract, I think it's under the as is, maybe it's section 14, 15, 16. That's where the defaults and the remedies situation. I believe the contract requires that the parties try to resolve their dispute amicably. So that's pick up the phone, call the seller and say, hey, I sent the cancellation on Friday. The inspection period ended on Monday. I'm well within the time period. Under line 141 of the contract, please give me back my deposit. If that doesn't work, the contract then requires the parties to go to mediation, which is when they go, I always tell clients, mediation is like family therapy. You have a neutral therapist, a mediator who's there not to take sides, but to try to resolve the issue. He or she doesn't take sides, and they're not there to say you're wrong or you're right. They're there to try to resolve it. If they can't resolve the issue at mediation, the third and final step is they are required to go to court and file a lawsuit. The title company cannot release the money. The title company and the escrow agent, any title company or escrow agent, can't release an escrow unless they have a release and cancellation or some type of written documentation by both the buyer and the seller. The title company, we're neutral. The closing agent is a neutral third party. We're just holding the money. And I know it can be frustrating at times, but that's what agents need to understand is every single title company in the state of Florida, and I'm pretty positive it's the same law throughout the entire United States, cannot release the deposit unless the contract says otherwise. So in this situation, the buyer says release the deposit. Well, then what happens if the closing agent does release it and then the seller calls us and says, I want the deposit? Well, now we have two different stories. So under Florida law, title companies cannot release the deposit unless it is acknowledged by both parties. In that situation, what we recommend is David just had a very successful case. I know you just had, I think David had an escrow dispute, I think it was last week or 2 weeks ago. It was an $8,000 escrow dispute. The seller believed he was entitled to it. The buyer didn't. And David drafted a demand letter. The sellers hired David and for a flat fee, because we try to do a lot of our work on flat fees so people understand what they're going to cost. David wrote the demand letter. It was a great letter because I remember seeing it go out. And the sellers, the buyers, after David sent a very professional but very stern letter to the buyers caved and released that. I think it was $10,000 escrow. And that's what we try to do. That's what we tell buyers or sellers. If there's an escrow dispute, give us a call. We can draft a demand letter. There is a fee for it, but sometimes it works, sometimes it doesn't. Obviously, we can't control what the parties do. And I believe, Dave, is that the last question? Okay. One more? Yeah, we already did that one.
We've done those. Because of the limitation. So we covered that.
What if you have a seller who wants to list their home and it may not appraise based on comps? They want buyers who have the money and ability to pay more than appraisal due to the condition and features of their home. How do you address this in the contract? Well, first of all, if you know that on the listing side that the home is not going to appraise, appraisals it's an art form. So, different appraisers can reach different valuations. As the listing agent, when you're there with the appraiser, you're selling all the upgrades. You're trying to tell that appraiser why this home in this subdivision is worth more than the exact same one. Well, I'm on a corner lot, or I face the conservation lot, things of that nature. But if you as a listing agent know that the home is not going to appraise, it's just so far off, then you should let the buyer know that in the beginning if it's going to be a buyer finance contingency. Or you may just say it's cash offers. You only want cash offers because you're not going to deal with the lender issue. And then, the buyer's all happy. You wait 30, 45 days in the transaction, and then the lender comes in and says the appraisal's low and the buyer shouldn't be there. You can always put language in the contract. If the buyer says, I want to use a lender, I want to secure a mortgage, fine, add language. In the event the appraisal, strike out the appraisal contingency that is built into the as-is contract and state. See, this is what I love about us here, is we're deal makers, not deal breakers. We're creative. That is how Barry Miller has trained us to get these deals done and think outside the box. What I would do if I was representing the seller and I know the appraisal was coming in less, I would add language in the additional terms, in saying lines 121 through 125 of the contract is hereby stricken. In the event the buyer's appraisal comes back below the loan approval terms, buyer must come to closing with the additional funds. Buyer does not have the right to terminate the contract based on appraisal value. There you go. Puts it right there. And the buyer needs to make sure that he has the cash to do that.
From a listing side, your time is your money. If you have a just unreasonable seller who thinks their home is worth $1 million and it's a $250,000 home and the comps in the neighborhood are $250,000, how much time do you want to invest in that person?
Correct.
Understand what the situation is, set a realistic expectation both for your buyer and seller, and hopefully that allows for a smoother transaction.
Again, but what I just spouted off about my additional terms, that's where agents need to be careful. If an agent is going to use that language, feel free to do so, but I'm putting a little caveat out there. I would probably still, as the attorney, want to tweak it and make it more secured for your seller. So that's where you need to work with a title company such as the closing agent, where we're backed with a team of attorneys. In the as-is contract, do you need the appraisal addendum? Well, it depends on what the, generally speaking, I don't think so, because if it's going to be a finance transaction, then no, you do not need to have it, in my opinion. If it's a cash transaction and your buyer wants to make sure that it's a secured and wise financial investment, then absolutely yes. When you have an inspection that has already been completed on a listing where the contract fell through, does the seller agent share that inspection with the buyer's agent of a potential buyer that a contract has been offered? Okay, so great question. I would say yes. So that situation is, you're the listing agent. David, you're going to buy my house that I have the listing for. Our contract falls through because your inspection report shows that there's termite damage and mold all in the attic. Not visible unless you go into the crawl space. I don't know about it as the homeowner, but now as the listing agent and now as the seller, I'm aware of it. Now, Barry Miller comes over to buy the house. Yes, the listing agent and the seller have a duty to disclose it. The buyer now knows of a material defect of the home, and failure to disclose that will now subject the buyer, the seller, and the listing agent to liability. And let me tell you, you will incur tens of thousands of dollars of attorney's fees. So be proactive.
And when it comes to the actual report, if you have knowledge of something, it should be disclosed to future buyers or potential buyers. You, as the listing agent, may or may not have the actual report. For example, the home that I canceled the contract on, I had an inspection. I went back to the listing agent and said, we're not closed, we're canceling the contract. And they asked, well, why is it? I ended up selling to the seller my inspection report. They paid me half of the cost of it because they wanted the actual document. If you represent a buyer, that's the buyer's property. That report is paid for by the buyer. It's at their discretion whether they want to provide it to the seller. Now, as a seller's agent, if you acquire that report, you have no obligation to pass it on, but you certainly then have the knowledge of anything contained within that report. And as Robert said, then you have the liability of making sure you disclose whatever's contained in that report.
Do you ask that the listing agent have the seller update the seller disclosure to show items that were discovered in an inspection when the buyer walks or cancels on the contract? Can you ask the listing agent to do it? Absolutely. No harm, totally ethical, totally legal.
I believe part of the seller disclosure, the last page, I think, says room to update any additional information that the seller has to disclose.
So here's the issue, again, the gray area of the law, and that's why, there's always two sides to a story. David, your home inspection report states that the roof is structurally deficient. Now, the seller's thinking, do I need to disclose this? Generally speaking, I would say yes. But what happens if I say, no, my roof is fine, and I hire an expert, a roofer who goes up there and says, that inspector didn't know what he was talking about. Your roof is great. You have another 20 years of life on it. Well, now you have two different stories. So what happens there? This is where the courtroom comes in. It's going to be up to a judge, a jury to say, which roofer, which inspector do I believe more? Do I like more? Which one has better credentials? David's inspector who says there's a roof issue, or Robert's who says there is no roof issue? Two sides of a story, and that's why it's better to disclose it. I would just state, so there's always those little caveats there.
Can the seller require the buyer hire a certified inspector if the buyer does an inspection? Well, the buyer is under no obligation to perform an inspection. Again, as we've said, if the buyer does an inspection, they should ensure that it is a properly licensed inspector. Can the buyer choose the closing agent? Yes. Typically, whoever pays for the owner's title insurance policy and title search is the one that selects the closing agent. When we represent a buyer, oftentimes we elect to choose the closing agent. But yes, absolutely. I think it's section 12
Title.
13.
As we know, the
Anyway,
tradition
In the contract, you'll see where it talks about title. One of the subsections is either seller pays for the owner's title insurance policy and chooses the title company, or the other section is buyer pays for owner's title insurance policy and chooses the escrow and closing agent. But yes, the buyer can choose.
The buyer can choose. We know traditionally in Central Florida here, the seller pays for the title insurance policy and the seller listing agent selects the title company. So for all you listing agents out there, we thank you for your business. But in South Florida, for example, it's my understanding the buyers are the one who normally pays for the owner's title insurance policy and selects the closing agent. But if you're representing the buyer, and we appreciate everyone's business here, ask your seller, why are you using this title company? Hey, their rates are more expensive than the closing agent. It's a win-win situation for both parties. That title company is not attorney driven and backed, such as the closing agent. That title company only has 4 or 5 years of experience. The closing agent has 20 years plus of experience. We have 7 offices. So you can always ask and negotiate. People should be doing business with competent professional. You come to the closing agent, you're getting a law firm professional experience. When the big boys in town, when the wealthy individuals buy and sell property, whether it's an individual or a company, they go to lawyers, they go to professional companies. So that's what we hold ourselves out. We are attorney backed and driven. So hold yourselves to the high standard that you want to be as well.
So this will be the last question. What about an AC unit that has been repaired, but the inspector says that it's useful life? Well, this is an opportunity for the buyer to go back to the seller and say,
Yep.
hey, I know you did this repair, but I have this inspection report that says it's done. I want a $1,500 credit. It's an opportunity to negotiate.
And just be careful, one last comment I'm going to throw in there about people think, well, I had a leak, but I fixed it. Do I need to disclose it? Yes, you still disclose it. Most agents get tripped up on that. I believe the seller's disclosure even says, has the property ever leaked or something? It's in the past tense is the question. Most of us have had leaks. Yes, the sink, underneath the sink, it leaked and I had it repaired by a plumber. It cost me $100. Done, move on. So again, everyone, thank you. If you have any additional questions, please feel free, give the closing agent a call. We have 7 offices now. We have downtown, Winter Park, Ocoee, Altamont Springs, Lakeland, Merritt Island, and I'm missing
Celebration.
And Celebration. So we have 7 offices. We have a full team of attorneys here to help you guys. We thank you for your business. We look forward to seeing you next month in our next CE class. Next in April. David, would you know what day it is?
The second Wednesday.
It's the So please
April
join us
14th.
on April 14th, the day before tax day. So get your taxes done. We're here to help you guys. Thank you for your business. Stay strong, stay safe out there. And please like us on Facebook, like us on Twitter, add us on Facebook, add Robert Garcia, David Berman, Barry Miller. We're all here to help you. Give us a call. Take care.